Hello, and welcome to the Cities ABC podcast series and YouTube channel. My name is Dinis Guarda, and I'm here to continue talking with global thought leaders and influencers, and as well people that have been shifting the world, and as well inspiring us to create better narratives, better products, better solutions for humanity. We're talking about a lot of different areas, from fintech to innovation in technology, even people in different industries that have been checking and creating global solutions and global platforms. We've been having some of the global thought leaders in different areas. We're going actually to have a lot of ministers of technology and different organizations coming. And this podcast and videos are part of the platform I founded, Cities ABC, a new Wiki for AR intelligent smart cities tech digital platform that aims to create new areas of reinventing and uniting cities, universities, organizations, and all of us as citizens. This has been going for only 2 months, but we've been growing quite successfully. And we have been actually, more important thing is the fantastic insights we've been having from the people who've been interviewing and profiling on this series. So today we have someone that is an exceptional personality of technology, and as well was in the inception of one of the biggest companies in the world, PayPal, and as well a company that is still creating a lot of solutions and as well becoming more real for everyone that are using the internet, and as well, especially in COVID-19, an area that is more important than ever. So I'm talking about David Jaques. That was the first CFO of PayPal, and that seems provide financial expertise and senior management to private equity firms like BlueRun Ventures and banks as Silicon Valley Bank, and as well has been working with the Greenough consulting group, and as well leveraging a lot of different things. So David is coming from London. He moved to Silicon Valley, and has been actually, besides of course PayPal, which is the iconic company that everyone uses in the world, but as well a personality that comes from a UK background and then moving to US and Silicon Valley. That was part of the group of the successful called PayPal Mafia that became some of the most important people in technology in the world, and they've been actually more or less creating all the platforms that everyone in the planet is using as we speak. So welcome to our series of podcasts, David. It's a big honor and pleasure to have you here.
Thank you, Dinis. It's great to be here and an honor to be interviewed by you. So thank you for the invitation.
Thank you so much. So I'm very excited about this interview because, first of all, I'm a huge fan of the work of PayPal, and I've been using it since the beginning of the internet. But as well, it's not just that work, it's all the work that you and your peers build in Silicon Valley. It was actually probably the most disrupted phase, and I would only make a parallel between Silicon Valley and the Renaissance, when the Medici family made a massive revolution in terms of the world of, at the time, the financial industry, and they take it to a different level. There was passing from the state-owned economies and the empires and kings. So I would like to start, well, first of all, an introduction from you. If you could tell us about your background, an overview, an education. I know that you're very British and you move to become very American right now. So a bit of that history that is key to understand how you became who you are.
Sure. So yes, born in the UK, born in London, raised in South London. And it's funny because I always think whenever I counsel anybody or anybody asks me about careers in general and life direction in general, is that probably what you think you're going to do is not what you're going to do. And that was certainly the case with me. And I remember when I was finishing up high school, my dream was to be a teacher and to be a credentialed teacher. And my chosen subject was biology. And I never actually went on to study biology to that level. And instead, I ended up studying things like accounting and economics and business. And it was really the mentorship that I had from the headmaster of my high school that encouraged me to get a broader view on life before I settled in on something that I was very passionate about. And that was one of the best pieces of advice I could have, because that did broaden my horizon. I went out and looked at other things and realized that I had not only a liking, but I had a great affinity, and I was skilled at things like numbers and economics and logical reasoning. So that then led me to study those things. After high school, I was at Polytechnic of the South Bank, and then my first job ended up being with Barclays Bank. And that, again, was not because I had the wild vision to be a banker, but it was a good job and it was a fit for my skill set, and it seemed to have good prospects. And one of the things that I wanted to do in selecting an employer was to work for an international company, because it had also been a dream of mine to travel the world and to experience living in another country. So I joined Barclays Bank, did a few entry-level positions there, ended up working in the bank's trading room, traded the euro-dollar book and for a little while, and then really focused on currency and interest rate risk management, which I did for the bank, and also ended up doing as a service, advisory service for the bank's large corporate clients. And so in that particular world where it is very speculative, it is very short term, traders will look at what is going to be the move in the next 10 minutes and how can I make money. But my vision was really, how can the long-term economic impact of a currency or interest rate move affect somebody's business, and how can we protect against that? So I had the great fortune to work with a number of large corporations, divisions of the United Nations in Europe. And I eventually did get my itchy feet and wanted to move away from London. And so in the late 80s, 1988, I was offered a 2-year assignment to New York, which I grabbed willingly, went off to New York and did essentially the same job in New York that I had been doing in London, but with American corporations. And the geographical area that I was covering was primarily the West Coast. So it was Silicon Valley. And of course, Silicon Valley in the late 80s, early 90s looked very different from the way it looks today. And that kind of gave me more of a flavor for the innovative side of business, because I was working with a whole different set of organizations with different challenges and different things that I needed to look at and help with. So my 2 years in New York turned into 5 years. And right around year 4, I met my wife, who is a native Californian, who herself was about to depart for an assignment with her company to the Netherlands. So we had a long distance relationship between New York and California at first, and then between New York and Amsterdam for a while. And I, at that point, had a real liking and a flavor for innovative companies. I think the term disruptive technology didn't even exist back then, but it was the sort of thing that just really excited me and appealed to me. And I realized that the trading area of Barclays Bank was not going to really be able to give me that. So I planned on leaving the bank, and actually fortuitously the bank did a downsizing right around the mid-1990s. And so I left the bank, lived in Amsterdam for about a year, and supported my wife in her career. And then when her assignment ended, we could pretty much choose where we wanted to live. We could have stayed longer in Amsterdam. We could have gone to London, where I certainly had some roots with family and career. We could have gone back to New York, but what made sense was to come here to California, because my wife Diane had a job to come to, and she had a condominium here, so we had a place to live. And 1994 was a pretty challenging period to find a job. So it took me a good 6-7 months before I landed at Silicon Valley Bank. And I was the treasurer at Silicon Valley Bank for 5 years. Wonderful institution right here in the heart of Silicon Valley that lends primarily to venture-backed companies and technology companies. And the end of my time there, the next bug bite that I had, if you like, was the dot-com world and the online world. And I found this tiny little startup in one-room office above a Hallmark card store in Palo Alto that nobody had ever heard of, called PayPal. And everybody said it would never succeed and it would never work. And well, that's a whole different story we can talk about in more detail. My tenure at PayPal was actually not that long, certainly not as long as some of the other people there. But when I left there, I was then hired by what was then Nokia Venture Partners, which was the first venture investor in PayPal. That got me into the mobile world and into venture capital. And that's the area that I've been working in pretty much the rest of the time. Venture capital is an area that is very prominent here in Silicon Valley. We have the huge iconic venture capital firms on Sand Hill Road in Menlo Park, and then we have many hundreds of smaller firms, most of which I've tended to work with, and or many of which I've tended to work with in the smaller category. And then done a number of independent consulting engagements, and for a number of years was with Greenough Consulting Group, that was a provider to venture capital and startup companies. So I've been pretty much the outsourced CFO, renter CFO, CFO to go for about the last 15 years. And what's been incredibly rewarding about that is that it's opened up this horizon of a huge amount of companies, and has really given great insight into what companies are doing and what technology is being worked on. And even though I myself, I'm not an engineer, I'm a finance guy by background. Finance, accounting, corporate governance is my world. I'm not an engineer. I'm not a technologist. But if you live in Silicon Valley, it affects you, and it affects you somehow, some way or another. So that kind of brings me up to today. And currently, I still have a few consulting contracts in my own consulting practice, and I have a number of board seats on some companies, which I certainly enjoy having the equity interest in the company and being able to guide and steward those companies, hopefully to even more success than they are at today.
Amazing. And I think especially your trajectory comes from, well, first of all, more than 10 years with one of the leading banks, Barclays. Then, of course, the leading bank, especially Silicon Valley, which is actually probably the most iconic bank in Silicon Valley. And then, of course, to PayPal. So I think I would like to start with Barclays, actually, because it's interesting to see your trajectory from being responsible for multiple roles within Barclays, which is still one of the major banks. And it went through the .com, it went through the financial crisis, and it's still one of the leading global banks, although not as big as others, but still quite big, especially in the UK. So that experience of 10 years, and you mentioned the currencies and all the different areas with finance and trajectory, brought you then to Silicon Valley Bank and to, of course, PayPal. And then, of course, a lot of things we do with startups and all the ecosystem of VCs. So from Barclays' experience, what would be, I think, that experience, especially you started when London was the financial capital of the world, and it still is, but now it's a bit more blurred. But then you shift to radical opponents that are the ones building the new financial leadership, which at the moment, if you put probably the valuation of PayPal in the table, probably is bigger than most of the banks that we have in the world. So how do you see right now that trajectory? And I would like to give a bit of some of the, probably the careers highlights that you had, especially with Barclays and Silicon Valley, before we go to PayPal.
Sure. So, Barclays Bank was certainly, one of the biggest banks. It was one of the big four banks in the UK at the time that I worked there. We used to joke that there's a Barclays Bank on every high street corner. Well, a little exaggerated, but not far short, because they were certainly in every town. And through various acquisitions that they've done over the years, sometimes you find two branches of Barclays on one high street. That was not uncommon. So a household name. And to me, the thing that I benefited from personally and for my career was it was the Margaret Thatcher era. It was the era of deregulation of financial markets. So it opened up huge possibilities. And the things that were really developing and developing very quickly was derivative financial instruments. And, derivatives have gone through a huge roller coaster over, say, 30 years of being, very credible, very useful tools to be able to hedge a genuine exposure to being abused and being used for speculative purposes and putting institutions out of business. And so it's almost like there's been a full wave of let's deregulate and open up this new market. And now we do have regulations again and regulatory bodies around the world that are regulating the use of these instruments and making sure that banks that underwrite these instruments have sufficient capital to be able to support them. But that it wasn't an issue back in the time that I was becoming familiar with these instruments, and things like interest rate swaps and forward rate agreements, forward currency contracts were becoming very prevalent, and they were being used a lot. And so I was able to apply the use of these instruments and be able to help my clients, or the clients of the bank, hedge their interest rate and currency risk exposures. And of course, the other thing, if we look back in those days, was that every country in Europe had its own currency. So it was, at least a decade before the creation of the euro, which many skeptics said would never happen. So never believe anybody that says that something will never happen. Every country. So you'd have a multinational company, particularly U.S. companies with exposure in Europe, who would have exposure in 10 different countries and 10 different currencies. And for some, there would be a proxy currency, like the German mark used to be. A proxy currency for some other currencies that would be largely tied to it, so you could use those strategies. But that was a very different world and a very different era, and it was really the creation of those instruments and the use of those instruments that I was then able to take to New York, because they'd really been created more in London, and then introduce them to the bank's clients and in the US side, where again it would be a little more critical because we were looking at the US dollar exposure to European currencies rather than the UK, the British pound exposure to UK currencies, where we did have the European exchange rate mechanism. We had certain parameters that existed for a while, but the US dollar as the exchange currency for the rest of the world never really had that tie, aside from some currencies that are tied into it. So that was really what working for a large institution with a large amount of capital and the ability to invest in these instruments and make them successful and make them a part of their portfolio of products was highly educational, very exciting, and very fun to be a part of at the time. And I actually found that probably one of the more difficult career moves I've made was the transition from Barclays London to Barclays New York, because I just assumed that everybody knows Barclays Bank. Everyone's going to know Barclays Bank in New York. And in fact, very few people in the US have heard the name Barclays. Anybody working in the banking industry, it's a familiar name, but there were, many of the bank's clients that we would call on, and they say, "Oh, yes, where in Europe are you from again?" And nobody used to know who Barclays Bank was. So it was a huge cultural impact of having this big household name behind me to having to sell myself as the representative of one of the world's leading banks that you just haven't heard of. No, we're not Citibank, we're not Bank of America, we're not any of the iconic American banks. But this is our specialty, and this is what we do. And of course, it was in my line of business. It was the connection to the UK and my clients that had exposures, particularly to the UK, would work with a British bank, as any company with an exposure to Germany would work with Deutsche Bank or one of the German banks. So that was really my growth experience over those years that I was with Barclays in two cities. And then Silicon Valley Bank was a very different institution because it was very domestically focused at the time, was not an international institution. It is today, but when I joined, it was a domestic bank. If anything, a regional bank in the state of California with a few offices. I think it had an office in Boston, an office in Portland, Oregon, and one in Southern California. But the headquarters was here in Santa Clara, California, right in the heart of the valley. And what I learned there is that and together with many of my peers in different roles throughout the bank, was that if you had the experience from a large institution and you could take that large, more global, international approach and the benefit of and the luxury of the capital you had behind you and apply those principles in a smaller institution, you can be incredibly successful. Because one thing that even though I was unfamiliar with the client base and the type of lending that Silicon Valley Bank did, having the infrastructure of working for a large treasury organization, when I was appointed to the treasury of a small bank that was undergoing some problems at the time, and in fact, in the mid-1990s, Silicon Valley Bank did have some fairly significant problems, have been placed under a regulatory consent order. The management team had changed over completely, and under the then new CEO, a wonderful man named John Dean, who turned the bank around from potential failure to incredible success. And he's done that many times in his career. I was part of that. And it was almost like working in a startup, because I would say a restart, because given the problems and the issues that the bank had, it had really been hobbled in many ways as to how it could operate. And so we had to rebuild that whole infrastructure, rebuild the policies, the procedures, the safety, the soundness, the regulatory compliance. And these are all of the skills which I'd acquired over the years by working for this huge global institution. So that was actually a very fun ride to work for 5 years in this institution. And while none of us really notice from day to day how our employer changes, when I look back over that 5 years, the bank changed tremendously, moved to new headquarters, started to roll out a whole new line of product, and really focused. And the thing that made the bank successful and is still successful today is to be very focused on the industries in which it invests and which it lends. And you could say, well, it invests in technology. Yes, but what they did was they broke down every aspect of technology. So you'd have a whole different team looking at software to the team of people that were looking at life sciences and every other area. So it became a very, very focused organization where the teams of people working in those particular industries of clients intimately knew the industry. So not only were they very talented bankers, they knew the industry. Now, when I use the word banker and I look at myself, it's in a somewhat loose way, because I've been employed by banks for much of my career, but to be honest, I don't really look at myself as a banker because I've never actually underwritten a loan. And that's, to me, what I look at as banking is deposit taking and lending, the bank's core competencies. And I've never actually been a lending officer. I know the criteria, I know the stuff out there, I know the things they look at, but it's not something I've ever done. I've always worked in the support groups, particularly the finance group, and as treasurer of the bank, which I saw grow from a bank that had under $1 billion in total assets when I joined to over $4 billion when I left. And I don't know what their number is today, but it's huge. It's many multiples of that, many, many multiples. But I was essentially the person responsible for the bank's day-to-day liquidity as treasurer of the bank, which was a great position to have. And of course, we were typically a cash-rich bank. Deposits exceeded loans, and so we had the great luxury of not having to leverage to be able to lend. We had a good stable core of deposits from the bank's customers. And of course, the thing that was going on in the 90s that really then became the platform for my next career move was what was going on in technology. And really, it was the advent of the internet. And early 90s was the early days of the internet, even though, yes, it had been around for a lot longer. But for the internet to become a household name, and for this to be something that somebody uses every day, and for the term .com to be language that people understood, it wasn't really until about early to mid 90s that became a concept. And that really laid the stage for a lot of what happened next. And as we affectionately call it, the dot-com bubble that burst a few years later. And we saw the incredible growth and success of many companies that then failed. So it was really that kind of brought me to the end of my banking career. And really the feeling was banking is a wonderful career to have. I've met some incredible people. I've been successful in it. It's been enjoyable, but there's certain limitations as to how far I can go. And if I stay within banking, I'm going to shut off a lot of the other things in the world. So that was when I decided maybe banking is over for me. Maybe this is time to move on and look at a whole different world.
That's an impressive trajectory, and as well, it's very interesting because you went through the mostly the major developments in the history of finance. That if you look at when you reach and you start your career, London was still the financial center, but it was much more, like I said, the emergence of derivatives, then the emergence of the euro, and as well the emergence of Fintech, or as we call it, because everything happened at the same time. But there was a huge revolution on that level. So I would like to touch on that area. So, and of course, PayPal had a huge weight on that because it was the first kind of payment infrastructure for the internet, at least that became mainstream. So one of the things I would like to ask before we go on the question more on PayPal is this. So in terms of this evolution, you went through all the stages, like you said, even from not only, although you don't see yourself as a banking, you are an expert in banking like few people in the world. From treasury is still one of the key things for banking. And you have, of course, all the areas of financial, you were in capital markets, you were as well in Barclays Capital and so forth. So how do you see this trajectory? Because it was a massive revolution. I think for someone now looking at this, it's kind of obvious. But if you just go back 10 years, yeah, it's a massive, because now we have crypto, you have blockchain mainstream, we have artificial intelligence, chatbots, but we still had completely paper and a completely very, very hierarchies of banking, very conservative as well. So I would like to have your experience, and of course that experience is quite precious to demystify all this revolution that sometimes we don't see it as big as it is.
Yeah, I agree. There's so many things going on, and there's a lot of exciting things going on today. And I think that for me, one of the things that I think is that you have to look geographically and what is happening geographically and in different parts of the world. And I almost look at banking today and I mean retail day-to-day banking today and the way people use their banks a little bit the same way that I was looking at mobile technology 15 years ago. And that is that you have some incredible innovation and you have some very good banking platforms. And, for example, I mean, I'm originally from the UK, and I remember, way back when the typical way of making a payment in a grocery store was to write a check and guarantee it with a banker's card. I don't think anybody even possesses checks in the UK anymore. Everything is electronic. Every payment is made electronically. The contactless debit card, the contactless credit card, ubiquitous. Everybody uses those. But here in the US, I would say we are at least 7 years behind, maybe even more. Chip and pin technology has not even evolved here. You can use your debit card in most places using the chip and pin, but credit card, chip and pin has never been rolled out here. It's a huge infrastructure problem because the banking infrastructure is so diverse. There's so many components of it. There's so many players, and it is very difficult in a large country that is governed by 12 different regional Federal Reserve banks and thousands of regional banks, whereas in a smaller country, smaller geographical country such as the UK and most other countries in Europe, you have a much easier infrastructure, and you have you pretty much have a master infrastructure through which everybody can channel their payments. So I think that that's one of the things that I really look at, is that considering I live here in Silicon Valley, in the center of the technology of the world and innovation of the world, and yet if I pay by credit card, I still have to sign my signature on a piece of paper. How archaic is that? So I think it's still something that, if you look at different parts of the world, they're developing very differently and at a very different rate. I do think that the world of contactless payments is certainly prevalent in Europe and many other parts of the world, but I think that this is something that now with COVID-19 has become an even more critical issue, and not just for simply making payments. And while it is really convenient to just tap your debit card on a terminal at Marks and Spencer food hall in London and walk out with your groceries and not have to actually touch anything. I mean, I thought that was great before there was COVID, and now it's even better because you don't have to touch anything. But not just from that aspect, I think food delivery is kind of going down that way. And I think that location-based services to track where people are at and where payments are being made and how they're being made and how it works in with the ecosystem of payments and deliveries globally. So I think that's where I think we will see some new innovations. But the fundamental banking across the world still has a long way to go. And so, yeah, I do believe the US is behind somewhat, as I made the reference to mobile technology, where Europe had really managed to develop far ahead of the US back in the mid-2000s. And I see the same thing happening with banking here. And then, we have a tremendous population of the world that are unbanked. People in Africa, for example, that mobile banking, mobile technology, mobile payments, as you'll find mobile phone technology opens up the world for people that are formerly unbanked. Latin America, I think, is another area. So there are huge markets where I think payment technology can really revolutionize how people do things in the world. And that for me is really critical. It's not just changing something in a small way, it's changing it in a big way, and being able to bring all of these great things and this ability to do so much to people that are unable to do it today.
Yeah, and I think it's a bit of a paradox, because having US created an inception of Silicon Valley, which you are part, but at the same time, he has a very big problem of actually taking some of the things that actually came out of Silicon Valley to its own country. So I don't want to go probably to geopolitics for now, but so from that inception and as well that evolution of the financial industry that started with all these paper transactions and as well big banks with big teams, big infrastructure that were the biggest organizations in the world, we shift to the companies that are much more technology companies that are becoming as well the biggest financial players in the planet. So I would like to touch, so from Silicon Valley Bank, which as well was one of the first banks that actually started funding Silicon Valley. I'm sure that you got a lot of insights into this evolution of Silicon Valley that became from a technological driven accelerated ecosystem for the US to become a leading from initially the transistors and all these areas to create the biggest organizations in the planet in terms of technology. So you saw all of that, and you actually were part of the inception of PayPal, and before that you are in Silicon Valley. I would like to touching, I know that you didn't have a huge time in PayPal, but your time was particularly important to put the bases and the foundations, and as well you work with all the founders. So from Silicon Valley, you went to PayPal. So I would like to hear that experience, because it's amazing, that work. And as well, PayPal was the first layer of payments for the internet, when in an area that people would say that, okay, it's not possible, I don't trust to pay things online. I remember having talks actually not long time ago, it was just 15 years ago, no, actually 13 years ago, with actually in a conference with big fashion brands say, you'll never sell haute couture online. You'll never sell a Ferrari online. Well, things change a lot. And PayPal was partly responsible for that. So I would like to hear about that inception and that work that you did there.
Sure. So, when I look at PayPal as an independent company, quite honestly, nobody's tenure there was really very long, because the company was founded in 1999, had an incredible run of success, went public in February of 2002. So, the company was barely 3 years old when it went public, and raised a huge amount of capital, and then sold to eBay later that same year. So beginning to end of PayPal as an independent company before the eBay acquisition was less than 4 years, or right around 4 years. So it's really a very short period of time. So what fascinated me about PayPal at the time that I heard about it was that, it seemed like the perfect fit for me in many ways. And what I really wanted I wanted several things out of the next job after Silicon Valley Bank. I was the treasurer at Silicon Valley Bank. I was ready for a CFO role. So I wanted something that could get me into the title of a CFO. I also wanted to get my hands dirty with a lot of stuff. So any large organization, and Silicon Valley Bank, even as small as it was at the time, was becoming larger. And I had my segment and I did my work. And even though I felt very much a part of the full team, I was still somewhat limited in what I could do. Whereas I really had this desire to be able to touch every part of the company. So a startup was clearly the place to go to be able to do that. And the PayPal opportunity came to me quite fortuitously through various people that I had met. And I actually ended up in July of 1999 just having a friendly informational meeting with a couple of guys at Nokia Venture Partners who I've been introduced to. And I really was trying to meet with some venture capitalists to see if they had any portfolio company openings. And I was given the background of this exciting payment type company for which I might be a fit for. And it really got my interest level. And I was introduced to Peter Thiel, who was the CEO and one of the founders of the company. And what really appealed to me was this was going to take payments to a whole different level. It was going to take payments to the internet, which had really never been done before. Even banks were incredibly slow to move. Even banks were not on the internet. This was going to take a simple thing like a payment from one person to another to the internet. And if you think back in 1999, one person paying another person, person-to-person payment, about the only way you would do that is to write them a check or give them cash. There was nothing else, no other way that you could do it. So to have this whole new medium, and when I saw the business plan and started meeting the people, not only did I realize that this was a great new concept, these are some incredibly talented people. So the two founders of PayPal, the company that hired me, were Peter Thiel, who was the CEO, and Max Levchin, who was the brains behind it. He was the engineer. And Max had come from a cryptography background. So he was a huge internet security guy. And so everything that happened would have huge multiple layers of security. And that gave me a level of comfort that, this is a financial service. You have to have security. The internet is still uncharted, unfounded territory. We have a lot of things we really don't know about. And so that gave me a level of comfort that, I was working with people who not only believed in the product, but would roll out a very safe product. And then as I became more familiar with it, what I realized was there was huge application for this. And as I started the conversation with the company, And, typically to go and work for an early stage startup that's doing its first or second round of capital raising, they don't need a CFO. You don't need a high level, senior level financial executive on your team. But this was a financial services company. And one of the things that they needed was somebody who understood banking. So that's where I came in with my background in treasury payments. I understood credit card transactions, ACH transactions. And so Max, with his incredibly brilliant engineering brain, was able to create the technology for the product. And I was able to work on building the interface with the banking system. And what I knew and what I still know about engineering is tiny. And what Max knew about banking was pretty small as well. But together, we worked very closely over the first few months and then brought about the launch of the product. So we raised capital. Nokia Venture Partners was the lead investor. And they invested, I think, there was a $4 million round, of which I think Nokia invested $2 million. And it was a $6 million valuation. So there'd been a friends and family round earlier on, but that was the first capital raise that we did. And in order to build the company and build it very successfully, we knew we had to accelerate. And there was a lot of other people doing innovative things in fintech at the time. There was an institution at that time called NetBank that was, I think, out of Georgia or somewhere. And it was solely an internet bank. I think they ended up getting bought by somebody else. And then the thing that we became aware of was a bizarre coincidence, was that there was a company called X.com, which had been founded by Elon Musk, that was also operating in Palo Alto at the same time with a very similar type of product. They were trying to integrate a full banking system with a checkbook at the back end, but it was very similar. And so the development of the company happened very rapidly. And before I get into the whole structure of the company and how that history developed, the turning point, one of the huge turning points for me in not just my career, but the way I think, is reactions of humans when they give you the negatives and what the reasons for those negatives are. And the two things that I heard in the early days of PayPal, when I would tell friends, business friends, family, and tell people about, this is what I'm doing. Firstly, people said, you left a job with a secure public company and a bank that has a great reputation to go and do this. Is this really the wise thing to do? Well, yes, it was the wise thing to do. And it was the thing I wanted to do, and it made me happy. So that is the right thing to do. But the thing that really made an impact on me was when the thing I was told more and more frequently was, you can't do that. You are not a bank. You cannot be a payment mechanism because you're not a bank, so you can't do it. And I said, well, why can't we do it? Well, because it's never been done before. And I've heard that argument so many times in so many fields. It's never been done before, therefore it's impossible. And how many disruptive technologies have been faced with that concept of, no, nobody is going to order a ride in somebody's car from an app. Everybody wants to hail a taxi in the street. It's no different. It's that level of disruption. It's never been done before. So if it's never been done before, maybe this is the time to start it, and this is the time to actually do it. So that was the first thing. And then the other thing, coming back to level of comfort in banking, PayPal was one of the first companies to be able to transfer money from your bank account to and from your bank account by ACH. So the American Clearing House, which is like electronic debit credit system. And what the pushback that I got from many people was, I'm not going to go into the internet and put in my routing number and account number because I'm giving somebody my banking information, and my banking information is private. To which my response will be, well, you go to a grocery store and you write a check and you hand the check to the cashier, you're handing that person your banking information because it's printed on the bottom of your check. What's more secure, handing a piece of paper with your banking information to somebody you don't know, or putting it on this internet site, which is backed by this person that I know has a huge level of security and integrity in the system that is being built, and you're totally safe. Nobody has access to that information. So those were the two big pushbacks, and that, if anything, was a springboard for me to really start looking at things differently and say, just because it's never been done before doesn't mean it cannot be done now. Maybe it doesn't get done exactly the way that we think it will get done, but it can get done. Now, the other thing that happened in the very early days of PayPal before the launch was that the product changed dramatically from its first intent to what it ended up being. So the original PayPal product was designed for a mobile device known as the Palm Pilot, which probably anybody under 25 has never even heard of. But that was one of the very first true mobile devices before the advent of the mobile phone. And it was a handheld device that you held in your palm, and it had your contact information, phone numbers, email addresses, street addresses. It had, you could keep certain banking information, you could sync it with email, but it wasn't a live email client. So it was dependent upon taking your Palm Pilot to your computer and syncing it with your computer. And then it would download the emails, and you could reply to the emails offline, go back and sync, and then it would send the emails. So, very antiquated by today's standards. But it also had this infrared beam. So if I wanted to pay my friend for my share of dinner or money that I owed him or whatever, you could do this simple beam from Palm Pilot to Palm Pilot, and I could send him $25. And then we both go back and sync our palms at our computers, and it would transfer the money on the PayPal server. So that was the original Pilot product, was you use the Palm Pilot. So problem with that, you needed to have a Palm Pilot. A lot of people did have them, and they were pretty cheap to actually buy. And then we also created the email attachment, where again, it was the fairly early days of being able to even attach documents. And, I would receive, I was still receiving document packages from lawyers by FedEx and paper documents to review and sign. It was just coming then to email attachments, long before the days of things like Dropbox and Box and those other companies. And so, what we patented was the ability to be able to attach a payment to an email. And it was the early days of AOL, and the tagline of AOL was, "You've got mail." When you opened your AOL email, it would give you this announcement, "You've got mail." And so we patented this thing, "You've got cash." So you get an email saying, "You've got cash." And it would say, "David Jaques has sent you $25, click here." And then by clicking on the link, you would sign up for a PayPal account. So it really was the early stages of that viral marketing. And it was pretty early on that light bulb then went off of, well, how many Palm Pilots in the world versus how many email addresses in the world? And if you have an email address, you can reach pretty much anyone. And so it really got rolled out as an attachment to an email for a relatively instant payment. And then the world lurking behind it was the auction business, and eBay being certainly the earliest and most prevalent auction site at the time. And even when we launched the product on 25th of October 1999, within the first week or so, people were asking, "Can I use this for an eBay purchase?" And the reason that then revolutionized the auction sites was that prior to the advent of PayPal, if I was buying something on eBay, I would make my purchase. I would mail a check to the seller. The seller would deposit the check at his bank, wait a few days for it to clear, and then at the end of that time period would send me the merchandise that I bought. So it was probably going to be 2 weeks for that whole cycle to complete before I got the thing that I bought. Whereas with PayPal, you could get your money instantly. And even though you didn't have it in your bank, if you had it on a trusted server, so you saw that you just received $125 from whoever, with regard to a purchase of an item, you've got that money. You can play around with that. You can use it to send to other people. You can send it to your bank. You can do a lot of different things with it. But it made that instant person-to-person payment possible where it had never been before. And, you know, auction sites, even though there were such things as power sellers back then, it was mostly, you know, people selling things they didn't want to people who did want them. And so, so that changed very rapidly from the time I joined in July to the time we launched in October, so 3 months. We've gone from this beam on palm pilot to this, well, you can use this for an auction site. And along the way, we made a big adversary out of eBay because we were seen to be, even though we weren't taking their core business away from them, they were trying to build something themselves and had never quite done that. So the initial relationship with eBay was not the smooth one. And it was an interesting one because eBay realized that they could increase their business by having the ability to have their clients do instant payments. But they were, I think, a little concerned about who is this, and we were still a startup at that point, and how was that really going to work? So yeah, within a very short period of time and within 6 months, well, we launched on October 25th. By end of the year, we had 50,000 customers. By the end of January, I think we had 400,000 customers, and it just increased exponentially after that, and had to go out and raise 2 more rounds of capital within the next 3 months. So it was certainly a crazy time. It was a frantic time, but it was the right time to be doing something like that. And it was a great opportunity to be a part of it and to actually help build it and see the development of it, and be in those meetings, those many meetings that lasted late into the night of flow charting on a whiteboard, and then having people go off and do their thing and create what it was. So that's the insiders to the very early days of PayPal.
Yeah, that's an historical, an iconic moment of the internet, and I think it's interesting because from this group that you work with, we're talking about, and you mentioned Elon Musk, Peter Thiel, and Max Levchin, that are right now behind probably the most disruptive, and they created disruptive technology in a lot of ways, or at least they were the people that led the biggest organizations and that are right now the mainstream monopolies that we're using on day to day. So how was this experience? I know that you had a particular experience with Elon Musk, but Peter Thiel is still leading the VC world and then as well behind a lot of things, and Max Levchin is still involved in a lot of companies and startups. So with them, there's other people like Reid Hoffman that was as well involved, but less involved. So how was this experience? And I just want to understand this because this is about people as well. So you have in one end the experience of financial unique background, which is working with some of the leading companies in finance in the world. In one end, working with disruptive technology and innovation, but in the other end as well, people, because it's people that make this happen. And especially these people in particular were behind massive corporations and why they're right now leading everything we do. So I would like to hear just about that human experience.
It was great. Yes, it was a very diverse mix of backgrounds, which on paper you could say, how are these people ever going to get along? But they did. So Peter Thiel was pretty much an unknown name at that point. I was aware of his very right-wing libertarian political views, but he didn't really talk about them. I mean, he'd welcome a debate if you wanted to get into that conversation. Politics was never really anything that was discussed in the office, aside from anything that was more personal views. So that wasn't really an issue. But the one thing about Peter Thiel, as much as I don't believe in his political views, and I don't agree with many of the things that he's done politically. 2 things about Peter: he was actually a very compassionate person. He did care very much about people, and he realized that he had the responsibility that if the whole thing blew up and the company had gone under, people would blame him, and he felt that level of responsibility. And the big thing about Peter, which he has continued with, is that he is always the contrarian. So the thing I've never really known about Peter is he the contrarian because he really believes in the contrarian point of view? Or does he want to argue that viewpoint because everyone's arguing the other way? And when you have somebody like that in the room, you do get into some incredibly creative and in-depth discussions. And even, even in something product-wise, business-wise, when there'd be pretty much the decision, this is the way the world is going, Peter would always have another viewpoint and say, but we also ought to think about it this way, which is never a bad thing, because if he's thinking about it that way, maybe somebody else is. And, to my point about the product that we originally created was not the product that ended up existing. So that contrarian view and that creative view was a valuable thing. Max, with his incredibly smart engineering brain, and also, I remember having some fascinating personal conversations with Max about he and his family who migrated from the Ukraine several years before and arrived in the US, pretty much with nothing. And he and his family have been not that far away from Chernobyl in the 1980s. And so he had some stories to tell about that, and had a very, very interesting background. So was a very unique individual. And certainly, if Max trusts you, you'll go a long way. And if you can build a good relationship with him, you'll have a friend for a long time. So together with, as I say, he was a cryptographer, security was his big thing, and that was paramount within the company. And then Reid Hoffman, who I met very early on, he was actually one of the founding team. He was the independent board member. And at the time I met Reid, he was actually working, he'd been a founder in a company called SocialNet, which was one of the very early dating sites, social networking sites. And that company had just raised a round of capital. I think it got bought by a European company, and he put in a huge amount of money and left with very little. But we then brought him on board as chief operating officer of PayPal in January of 2000. So we brought him in to be part of the team. And to me, Reid was the sane voice of reality. So whereas you had a brain like Peter, who was always looking at the very contrarian opposite viewpoint, Reid was the one that could always bring the conversation back to reality and say, yes, but the reality of the problem today is this, and this is an issue, and this is what has to be fixed. So very logical, very rational thinking guy. And I almost looked at it as, I needed another level of stability in the company, and somebody that could come in and do that I could work with. So I immediately, from very early on, built a very close working relationship with Reid, who's, again, is another person of extremely high integrity that I trust implicitly. And another person that came along at the time, who I remember interviewing, was Chad Hurley, who later went on to create YouTube, which is one of the areas where this video is going to be published. Had just finished his undergraduate degree somewhere on the East Coast, flew out to interview with PayPal for the job of graphic designer for the PayPal website. And he came wearing a suit. He looked like he was about 14 years old, and a very smart guy. And at that point, the company was so small, you interviewed with everyone in the company. So I interviewed with him at a little coffee shop around the corner, because we didn't even have a conference room in the office. And everybody pretty much gave their thumbs up. Yeah, we should hire him. And we brought him in, and he designed the first PayPal logo, among other things, and worked his way in the company. And like I said, later on went on to develop YouTube. And then the situation with Elon Musk came about quite differently, because, as I said before, He'd founded a company called X.com, which he had self-funded. He had actually had created one of the very first internet search engines, a company called Alta Vista, that he had sold for a decent amount of money, and had self-funded X.com, and had hired a good team of people. He did also raise some venture capital, I think, from Sequoia. So he had his own personal money he'd funded the company with, and venture capital money, and brand name venture capital. We had Nokia Venture Partners. He had Sequoia, so he had something that was a little more recognizable than we did. And had hired Bill Harris, who was the former CEO of Intuit, and a couple of other very good senior level people. So he had a stronger team than we did. We had the better product and the better technology. And so you then had, this is first quarter of year 2000. So capital markets have not quite imploded, but they're on the point of doing so. And both companies had raised money and was burning through money and hiring people like crazy because we had to scale, we had to ramp up. And what was happening was, both X.com and PayPal were spending huge amounts of marketing money to try and kill the opposition. And both products had launched. Products were virtually the same, very similar type of product. And I'm not quite sure who proposed it, whether it was the X.com guys or whether it was Peter, but there became a meeting of the minds of, well, we should at least talk and we should know each other. And by the way, we're on the same street in Palo Alto, so we're close by. So that started the initial conversations of, let's at least know who these people are so we know what we're dealing with. And then it became pretty evident that if there's two companies trying to do the same thing, that by merging the two forces together, then you become, and I don't like this term, but the 800-pound gorilla, the big elephant, you become the master at this, and you become stronger because you're not spending this negative energy in trying to crush somebody else. So that's how the conversation started. And several rounds of negotiation later, we ended up at a 50-50 merger. So straight down the middle. And to this day, I don't think there's an easy yes or no answer of was that the right thing to do. Nobody had the crystal ball. Nobody could have told. And if we had not merged with X.com, would X.com have gone out of business and we would have prevailed without the 50% dilution in equity? Who knows? Would X.com have been able to pull some magic out of the bag and killed PayPal and we would have gone away with nothing? Who knows? But what we did know was that by combining the two companies together, it made it a very formidable company and a platform, and really became the global lead, in fact, the only one. There was a couple of other companies trying to play at it. There was a company called Dot Bank at the time that ended up not being successful. A few other people were trying to do something similar. But by combining X.com and PayPal, what we were able to do was to raise $100 million of equity capital at a $500 million valuation, and do it in a very short period of time. And in fact, the first quarter of 2000 was one of the busiest quarters of my life, because we closed the merger of the two companies on the 30th of March and closed the financing on the 31st. And the financing could not close until the merger had closed. It was contingent upon the merger. And we attracted some global investors. And in fact, it was so oversubscribed, we even had investors just wiring us money. People would wire us $1 million without signing the subscription agreement. So crazy as the time was at that point, this really did happen, in the hope that they could get in on the investment. So we closed it off at 100 million, sent back money to people that were unsuccessful. We then did a follow-on round. I think we did 35 million later on, a few months later. And so we did admit some extra investors. But what that gave us was, 130 million in equity capital right at the time that capital markets did implode. And that was actually a visionary side of Peter Thiel, that he was worried about capital markets and was saying for a long time, this is crazy, this cannot last, this will not go on, this has to crash at some point. We need to raise capital now before the crash. And we did raise capital, and there was a crash. So that then gave us the ability to be able to grow. And then we had a number of things like fraud problems that cost a lot of money. But not to deviate too much, that was the people side of it. And yes, some very, very innovative, very dynamic, very powerful people. And there's certainly, if you want to be mentally and intellectually challenged, there would never be a dull moment around a group of people like that. And I've probably never been with so many of those type of people in one situation since those days, and maybe never will again, but it was a great experience.
No, that's very impressive. And as well, all these people have been not only, yeah, like you said, Peter Thiel is probably the most dark side part, but as well a genius in a lot of areas. But the other ones, Reid Hoffman and Max and all the others have been, and Elon Musk, of course, with his ups and downs, has been changing the world as we know it. So I want to move to the next level, and I think we passed 1 hour, which is fantastic. So I still want 2 questions, at least, or 3. So one of the things that you, after PayPal, which I know that you didn't stay for a long time, probably because of some things with some of that people, but I'm not going into the details. But I think in terms of especially the experience you did with the first Nokia VC firm that became BlueRun Ventures, which is as well at the time, Nokia was the biggest mobile phone in the world. And at the moment now is a shadow of what it used to be, but at the time was as well bigger than Apple, let's put it that way. So as well, you passed from one giant that was a giant in inception to another giant, but a giant actually that starts in Scandinavia, but actually with a VC firm in Silicon Valley. So how was that kind of changing from one place to the other? I think that's interesting as well. At least there's a question I have for you.
It was a great transition. It was very much the right thing for me to do. And, having worked in banking, a startup, here in Silicon Valley, then venture capital was the next obvious place. I wasn't looking for a job in venture capital, but I and the managing partner of Nokya Ventures, now BlueRun Ventures, John Malloy, had become a great supporter of PayPal, a great supporter of me personally, and again, a person that I trusted. So it's back to that personal relationship of when you have trust in someone and you believe in what they're doing, that you want to work with them and be successful. So Nokya Ventures was founded in 1998, and its first fund invested in PayPal and a couple of other companies. And it was more of an experiment. Nokia was this huge giant in Espoo, Finland, right outside of Helsinki, that decided to go into the world of venture capital and start investing in early stage mobile technology, more to give it the insight as to what was happening and to contribute to that ecosystem, and to make some money out of it as well. So it was a whole new world of something that they had never done. And so there was, when I joined, I was one of the early people there. I think it was 5 people had all come from within different roles within Nokia, and had pulled together and formed this venture fund. Nokia Corporation was the sole investor in the fund. It was the sole limited partner in the venture fund. It was set up as a LP-GP, typical venture capital structure. And the first fund was very successful, and they invested the money very quickly. So then they went out to raise a second fund, and that was being raised in the year 2000, 2001. And they were taking in external investors. So this was no longer going to be a closed-end department within Nokia. This was going to have to be an independent organization. So that's when they needed things like financial reporting, compliance, audit and tax compliance, and those sort of things became critical. So John asked me if I'd be interested in being the CFO for this venture fund, and my response at the time was, well, I don't know a whole lot about venture capital. And he said, well, neither did I 2 years ago. And so it really was a case of a lot of us were learning it together. So I joined the firm, and the whole world of venture capital finance has this incredible mystique about it, particularly around Silicon Valley. People think finance for venture capital is incredibly technical. It's very complicated. It's really not. It's different, and if you understand partnership accounting, you can pretty much do it. There's every fund has its nuances, has its differences, and so no two funds are the same. And if anybody says, I want to create a pure vanilla venture capital fund, there's no such thing. Every venture capital fund is unique based on its investors and its portfolio. So that got me into not only the world of venture capital, but also the world of mobile technology. And also got me back into the international field, which is something that I love. So having gone from the Barclays environment where it was very much an international role, to doing things that were very domestic, and PayPal, which of course was becoming international at the time that I left, but was really a domestic company, as was Silicon Valley Bank, to get back into the international field again, and to have my peers in Finland and London, and help that organization grow into a global power, was great, and that's something that I really enjoyed. So over the period of the next couple of years, they raised the second fund, and of course it was a slow time in the markets because we just had the implosion of capital markets and .com, so everything was relatively slow. So any investment that was made in the early part of between like 2001 to 2005 probably didn't really do that well. It was a difficult time. But what we were able to do was to focus on mobile. And that's where, again, my analogy from earlier on was, if I look at the mobile world in, say, 2004 and 5, when I used to start to go to places like Finland, and I would realize not only were the devices very different, but what people were using them for was very different. And, here in the US in 2004, your mobile phone was used for a voice call, voicemail, and maybe text. Not even everybody had texting on their phone at that point. There was certainly long before you had internet connection. There was a very early phase of that where you could get some kind of a data connection and a data service, but it was very early. And then, I started to go to places like Finland, and I realized that, well, here, people are using their mobile phone to pay for a parking meter, to order a pizza. Kids are using them to play games with their friends. Why are we not doing this in the US? And again, it was more of an infrastructure issue. And so that was great to see that insight of, you're right. Nokia was the leading mobile phone company in the world. It was the best in the world at the time. And it was a great privilege to work within that environment. Plus, I used to get to try out all the new phones for free, because we used to get to try the phones out before they went to market. So I'd be switching my SIM card into a new version of a new phone every month at least. So great fun to be able to do that. And then with the advent of the third fund, the Venture Services Third Fund, that was the time that it was decided to rebrand completely. And while Nokia really enjoyed the ability and the visibility into the venture capital world and the visibility of the early stage mobile technology that it was able to get, it wanted to be less prevalent in the fund. So it went from 100% investment in the first fund, and by the third fund, it wanted to be a minority investor. So it was becoming smaller. So that really determined that, we shouldn't carry the Nokia name anymore. We should rebrand. So with a lot of thinking, we rebranded the company as BlueRun Ventures and separated from Nokia completely. So we had, for those first few years, everyone was on dual employment. We were employed by Nokia Corporation. We were also employed by Nokia Venture Partners, which was the management company. And then we just severed the ties completely with Nokia and just looked at them as an arm's length investor in the funds. So they were a limited partner in the funds. and we're treated like everybody else. So that relationship changed over time, but it remained a very strong relationship. And one of the great things about it was that as we were investing here in early stage mobile technology companies, if they needed to be able to leverage on the resources and the knowledge of the mobile phone giant, we're able to connect with somebody within Nokia that was able to help them out. So again, it's all about an ecosystem. That's the way I look at venture capital. It's an ecosystem that everybody has to contribute and everybody gets something out of it. And this was a very symbiotic one, and it was largely focused on mobile technology. And then, over my tenure with that group and with BlueRun, we then opened an office we had an office in Tokyo for a while, and then moved to China. So they now have an office in Shanghai and one in Beijing. We opened an office in Seoul, Korea, and in Tel Aviv, Israel, as well as the European presence. And the interesting thing about the time that I was there was we became a US venture capital firm, which had a strong European influence. And by the time I left, and certainly more so today, they're still a US venture capital firm with a strong presence in Asia. And really, come back to kind of your question of how did it come about for a Finnish mobile phone technology giant to start a venture firm in Menlo Park, California. It was seen as, if we want to get into venture capital, Helsinki is not the place to do it. We need to do it where the nucleus of people and where the network is. And John Malloy, who was the first person approached to do this, had a history within Nokia. So again, he was a trusted individual, and along the lines of never say never, John told me one time that when he was approached and asked if he would do it, and he was living in Virginia at the time on the East Coast of the US, he said, this sounds really fun. I'd love to do it, but on the condition I don't have to move to California. Well, I think 3 months later, he was buying a house in California.
No, it's amazing, and that shows as well a lot of the evolution of Silicon Valley. So, as the last question, because we passed 1 hour and a half, which is my benchmark, it has been a wonderful pleasure, and I have a lot of questions, but I think we could go for 4 hours, but probably we'll give it for a second round. So, one of the things that I would like to ask, and I think especially as a CFO, and as well you continue working as CFO for startups, and I think it's the way you speak is something that you like to do, to be part of that infrastructure, and as well as a financial expert. How do you see nowadays the fintech industry and all the things that happen after that, and especially the iterations with COVID-19 that we are seeing? First of all, a lot of challenges in the world economy, and you went through the dot-com bubble, you went through the financial crisis, and as well, of course, now we're going through massive economic and financial distress. But at the same time, we're going through a huge acceleration of digital transformation, that the society is becoming more digital, and a lot of things that probably would take another 10 years are right now going to be accelerated in 1 year or two. So I see this as future for work, for society and startups. From your angle as a financial VC and as well technology expert, and as well with this wealth and wisdom of experience that you have and that you acquired in the last decades of work.
Mm-hmm. Well, I think that the work paradigm has shifted, certainly within my career. Certainly in those early days, it was a very calculated commute to the office, do your job at the office, leave the office at the end of the day and commute home. We had our work life and we had our personal life, and the two never really intertwined. And then, it was with the introduction of the internet and remote technology, even though it's developed tremendously over the last few years, we've had the ability to work in places other than our office for at least 15 years. And I remember even, the dial-up modem in a hotel to be able to access your email was something that I could do in 2001. So, we've had the ability to be able to do that. The change that's recently been forced upon us I think is making a lot of people rethink both how we do business and how we manage our personal lives. And I think it's still developing. And what's happened now is, people have had that, even though most people, and particularly in places like Silicon Valley with the availability of technology, New York, any major metropolis, you have the ability to pretty much work anywhere. And, I myself, sometimes when I take off on a trip, I don't even tell my clients I'm going to be away because I can still do my job. Nobody needs to know that I'm actually in a different city. But, we've had this change forced upon us, and I think we're still trying to figure out how that looks, how it works. And I think there will be a reversion back to a lot of the ways of working that we had previously, but I don't think they will go right back to that. So certainly, with two things with regard to fintech and financial services, I do think that this is something that now has really brought about a need for more applications, more ability to be able to do things in a technological way, and it's certainly happening. But food delivery, which has been something that's existed now. We have firms like DoorDash and Uber Eats here in the US, which have been around for not that long, but for a couple of years, and now becoming vitally important. And the way that they are used, I think those companies are still struggling to meet demand. So I think that we could see consolidation. I mean, there's already been Uber has its own food delivery service, Uber Eats. You've got Grubhub out there. There's already been talk about you've got Postmates. You've got all of these different companies. I think there's going to be some kind of a consolidation in that area where it really solidifies and rolls up the way that deliveries are done, particularly in the food industry. And also that dovetails nicely into where we eat, because it was just a year ago, I could be at a client's office and we could be, working all day on a project, and we do a DoorDash order to the office and we order lunch for 12 people and it gets delivered at 12 o'clock, and we continue having the working lunch around the table with the flowchart on the whiteboard. That has all changed. And now you have people doing individual deliveries to their houses. So I think that, I think COVID is here for a while. I think we have to learn to live with it. Will there ever be a vaccine that will eradicate it? We don't know. Nobody has the crystal ball on that. But I do think that, we have to responsibly re-engage into some of the old ways of doing things. For some people, it's just not tenable. I mean, I'm fortunate that I have a large house and I actually have an office in a separate building away from where my family is. So I have the ability to be able to sequester myself in a secluded spot. But, you take the family of four with two young kids that are used to both parents going out to work in an office and the kids being at daycare, preschool, or elementary school. And suddenly everybody is at home trying to do their jobs with kids that are demanding and needy. The world of work just doesn't work anymore. You don't have that level of focus. I personally, although I'm an introvert at heart, but I do enjoy the personal meeting. I do find it incredibly motivating and fulfilling to sit and speak with somebody across a table, have the body language, look at people, be able to be a part of something. And everything that I've done, especially those early days in PayPal, that's all it was people sitting around a table, creating ideas and just verbalizing their ideas. We don't have that right now. I think we need to get back to that, but we'll never quite get back to the level that we used to. So there's a whole new work paradigm, and that's still evolving. What it will look like a year from now, 2 years, 5 years from now is hard to say. But I think it will be a little bit of all of these factors. The thing that I fear a little is that those boundaries between work and personal life will break down even more. And I think it's important that everybody does really give a priority to personal life, to family and things that matter. And, you can't be on call 16 hours a day. You have to, I find I work better when I segment my day. I have my work hours, I have my family hours, I have my sleep hours, I have my go out for a run hours. But I think that, we'll get back to that, but it's early days yet. And I think some good has come out of this, but I think we need to figure it out, and we won't really know the path forward until we know the pathway of COVID and how it's going to end.
Yeah, inspiring, and I think that is key, especially as we go through another and uncharted territories. David, there's a lot of questions, but I think I will leave it for now. I really want to thank you for your time and for the wonderful inceptions, and as well a masterclass in experience and doing a lot of different things. I don't know if you want to just say where people can find you. I know that you're not so visible online as probably your career is, but I don't know if you want, or if you, we will put, of course, information about you and put some bios and information. I think your story needs to be better told, because I think it's important for the world. But well, if you want to just give some social network or some places where you want to be or not, I leave that for you.
I am findable. I run my own consulting practice out of my own company. I don't really actively market it. I don't even have a website. But I am findable. I am on LinkedIn. That's probably the easiest way to find me. Simply do a search on my name. It's not quite a French name, because there's no C in the spelling of my last name, but there's not that many of us on LinkedIn, so you can find me pretty easily there. Thank you, Reid, for creating that company.
Fantastic, and I really appreciate. So definitely we're going to put all the links for that. And thank you so much once again, David. It's been a big honor and privilege. Thank you.
It's been a pleasure. Thanks.